So we've now reached the final session of the day. EU financial regulation, so much the better. To kick off proceedings, I'd like to invite Paulina Dejmek Hack, Director for General Affairs in the Directorate for Financial Stability, Financial Services and Capital Markets Union of the European Commission, to provide introductory remarks. Paulina has worked on financial services matters in the European Commission in different positions since she joined in 2004, including in the private office of former Commissioner Michel Barnier, subsequently Vice President of the European Commission, between 2010 and 2014. Paulina had then worked as financial advisor in the private office of the then European Commission President Jean-Claude Juncker between 2014 and 2019. In 2019-2020, Paulina was director of the Commission's Task Force for Relations with the United Kingdom and was directly involved in the negotiations between the European Union and the United Kingdom. Welcome, Paulina.
Thank you very much for the very kind introduction, and good afternoon to everyone. I'm just going to pour a little bit of water because I am losing my voice a little bit, so I may need to take a sip of water. I'm very, very happy to be in Dublin today. I work a lot with some formidable Irish people, thinking in particular about Commissioner McGuinness and our Director-General, Sean Berrigan, who spoke here earlier today. So I dare to consider myself to be just a little bit Irish, and I hope that that is fine with everyone in the room. I've been asked to give a couple of introductory remarks for the panel that will follow, and I know that we will have a panel which will be rich and cover a lot of subject on financial regulation in the widest sense of the word, so I'm not going to attempt to preempt that discussion, but I want to say a couple of words on a few topics, and the ones I have chosen for that is open strategic autonomy, and then international coordination, cooperation, and convergence, and then a few words about the trends and challenges, thinking in particular about the twin transition, digital and sustainable. But before doing so, I wanted to just reflect a little bit on the general context we find ourselves in. And I think that goes very much to the title of your very timely conference here today, which is this uncertainty which is surrounding us, which is surrounding Europe, and how we still have to try to make something good out of that situation. And I know that other speakers have alluded to that as well, but obviously the current geopolitical context we find ourselves in, Russia's horrible invasion of Ukraine and the kind of general instability around Europe, it obviously matters, and I think it matters also for us as financial policy regulators, supervisors, and practitioners. And I think the question we need to ask ourselves is, how do we place ourselves, the financial regulation, the financial sector, in this world which is so uncertain, which is so unstable, and where you see literally, geopolitical shifts happening around us as we speak. Some of these, of course, are also more shifts on the positive side, and some of you may have noticed that the European Commission today adopted the enlargement package, so with decisions for Ukraine, Moldova, Georgia, and the Western Balkans. So, but all in all, to say that there's a lot of things happening around us. And it's interesting also how that geopolitical context has really brought the discussion about competitiveness rather, of Europe again to the fore. And I think that for the financial sector there are two dimensions to this. One being, of course, how can our financial firms, our financial service operators be competitive on the global scale with their peers in the US and elsewhere. And many firms in Europe are top-notch, are internationally very active, but this kind of level playing field concern, I think that comes back quite a lot in the conversations we are having. So that's the one side of competitiveness. And the other side of competitiveness, obviously, being how can the financial system, how can the financial sector support our European economy, the so-called real economy, the corporates, and making sure that they are competitive in an ever-changing and ever more complicated world. I think the work we are doing collectively, many of us together, on banking union is important in that context. And I also wanted, of course, to mention Capital Markets Union, the work that, again, we are doing, many of us together. And in this context, I also wanted to refer to the really useful work of the Eurogroup under the leadership of Mr. Donohoe, and the whole idea of making the European markets more integrated, more stable, more solid, more resilient, and of course, being able to finance our economy. And with that, I want to move to open strategic autonomy, because for me, there is no contradiction between, on the one hand, saying that we need to do our homework in Europe. We need to make sure that we have a financial system, financial market infrastructures, financial structures in general that are solid, that are resilient, that are good, that are well regulated, and at the same time remaining open to the world. And I think that we all know that, of course, global markets are, financial markets are global, they are interconnected, and this openness is something which is important. Our own single market, the way, being open across borders in the European Union, has of course led to a bigger market for our own companies, but also, and importantly, a platform for many European companies from which they are then expanding out in the world. So again, I think that it's kind of important to have this kind of overall picture that on the one hand, yes, we need to be open and strategic and autonomous, but at the same time, the word open is really important, and this kind of continued openness, I think, to the world is something which is important. And it is something which is also quite integrated and inherent in our EU financial service legislation. I'm thinking, for example, about the policy tool equivalence, which we have, which at some level and to some extent is also a tool to foster integration and to foster more international convergence. And that is my bridge over to international cooperation and convergence. Some people will sometimes say that in a way international cooperation was almost easier during and after the financial crisis because there was a very clear roadmap. Of course, our multilateral financial institutions, be it the FSB, be it the Basel Committee, be it others, recommendations were made. G20 were checking in, endorsing these recommendations, making sure that people, or the various jurisdictions rather than people, would be implementing these agreements. But even though the context today is different, I still think that this work that we do together collectively with our global partners in these multilateral organizations is really, really important. And we saw it as recently as this spring with the turmoil in the US and in Switzerland. So this multilateral piece, I think, is absolutely essential. We also have the bilateral piece when it comes to financial regulation and cooperation. And there, the European Commission has a couple of established dialogues with our important global partners. One is with the US, where we have a structured regulatory cooperation, and we will be traveling over to Washington, D.C. in December. We had the Japanese colleagues over in Brussels a couple of weeks ago. And I think, not unimportantly, in Ireland, of course, we are happy that we have been able to start this regulatory cooperation, this dialogue also with the UK authorities, with the Treasury, the FCA, and the Bank of England. Some of us were over in London a couple of weeks ago to start that dialogue. And obviously, if we look at the international context, there will be divergences. Not all jurisdictions will choose to do exactly the same thing and regulate in the same thing. But at the same time, we have the multilateral bodies in which we are all members. And also, I think, importantly, some of the challenges we face, and the geopolitical challenges, obviously, very the same, but also, if we look at some of the greater other challenges of this time, and I'm thinking in particular about the climate crisis, of course, but also the digital transformation. And when it comes to climate, sustainable finance, the EU has done a lot. You will be familiar with the Green Deal, our overall EU framework. We know that the transition, the transformation of our entire economy will be very costly. Public finance is needed, but it will not be enough. We need a private piece. We need the financial sector to contribute, to be part of this solution rather than only contribute to it. We were quite early in the EU by putting in place a sustainable finance framework, 3 building blocks: the taxonomy, the corporate sustainability reporting piece, and the third piece being what I usually call the green toolbox, in other words, the green bond standard, and now, since recently, also our proposed ESG rating standard. There's a lot out there. It's a big puzzle, and the various pieces fit, but we are aware that this is sometimes quite complicated. It's quite a lot of rules that are coming into application now. And I think Jean Bergen referred to it this morning as well. So we are putting a lot of effort into the transition work, really important. We know where we need to go, but we also need to get there. So I think the whole piece around transition finance is really, really important. And we're also trying to be helpful to companies in terms of seeing where rules can be simplified, but also giving explanations and trying to clarify where things are not maybe as clear as they would need to be. So that's the sustainable finance piece. Digital, of course, also transformation, which literally happens as we speak. If we look at the kind of consumer retail side, already the behavior, the way people approach financial services, the way people want to buy financial products is shifting. Of course, a panel on that also earlier today, how you ensure best value for investors. But also, and many of you know that better than me, the way the digitalization is transforming the back office functions, basically the way financial institutions are working. And that's not even mentioning the potential, the opportunities, but also the risk that's coming with AI. And also here, I think the EU has done a lot. We have our regulation around markets in crypto assets, and we've been one of the first jurisdictions that have actually implemented the FSB recommendation on this. We have the piece on digital operational resilience, and I think more in general, the digital is going to be, of course, one of the areas where we are going to probably continue to see a lot of development and where regulators will probably need to kind of follow that development. So with that, I'm going to conclude. Always difficult to look ahead and not for me to predict the future. We are at the end of this institutional cycle now relatively soon. Elections to the European Parliament in June next year. Again, not for me to preempt what future policymakers may wish to do, but I think the areas I've alluded to here, be it competitiveness, be it sustainable finance, be it digital, are areas that are likely to continue to be very, very important. What I also think will always be very important is to have a dialogue, to have a discussion, to have a conversation where we together try to see how we make the best out of a very complicated situation. And I think this conference is a brilliant opportunity to do so. I'll leave it at that. Thank you very much.
Thank you, Paulina. Your remarks lead us very well into the next discussion. So I'd like now to invite the participants for the next panel to the stage. Sharon Donnery, Deputy Governor, Financial Regulation, will chair the panel. In addition to Paulina, Sharon will be joined by Michael Darcy, CEO, Irish Association of Investment Managers, Michael J. McGrath, Assistant Secretary, Department of Finance, Alessandra Perrazzelli, Deputy Governor, Banca d'Italia, Tanguy van der Werk, Director-General, European Fund and Asset Management Association.
Okay, thanks very much, Denise and Varish. Thanks again for joining us, whether you're here in the room or virtually. And I'm very conscious this is the last panel of the day, but I think we have the opportunity to build on what have been some really good discussions, very broad-ranging discussions over the course of the whole day. And maybe just to put the panel in a little bit of context, drawing a little bit on what we've heard about today, as you can probably see on the screen, I think the title of the panel is around EU financial regulation. Of course, I think it's really interesting for us in Ireland, as we reflect on Ireland's membership of the EU and 50 years of that, to think about how embedded we've become within the EU and just how important the EU has become in many, many dimensions of our life. But certainly for us at the Central Bank, the aspects around financial regulation, where so much of our work is about being involved at European level, whether that's in Brussels or in the EASAs, or the work Michael and his team in the Department of Finance do, for example, in negotiating negotiating legislation and so on. So I think I see it very much in that context. And of course, during the event today, we've also talked a little bit about some of our domestic policy priorities here, such as the IAF, which we've just heard about, but also the Consumer Protection Code and the ideas around securing customers' best interests. But of course, the EU regulation and EU rules also play a really strong role in securing customer and investor protection. So I think there's a very strong link there. But maybe the final thing in terms of the context, I think given all of that we've heard today, you know, some of the topics that we've heard about today that are really relevant for the panel, and in fact they chime a little bit with Paulina's remarks. First of all, the importance of resilience in this world where we face a significant degree of uncertainty and what that means for financial stability risk. We also heard a little bit about that in the context of, for example, economic fragmentation, going all the way back to Governor Bailey's remarks earlier. We've heard a lot, I think, all day about increasing risks from the non-bank sector and what to do about that, and we'll address that here in a minute. And also the speed of change in both the economy and the financial system. And of course, you talked about the sort of big transitions around digital and green in particular. And of course, all of these things matter because in the end, the financial system is here to deliver for consumers and the economy. So with that in mind, we're going to try and talk about three things in this final panel. The first, as I said, around developments in financial services regulation at European level in this global context. Some of the challenges and opportunities to how regulation is adapting to that context. And then finally, looking ahead a little bit, I think it was mentioned already, obviously the European elections next year, we'll have a new commission. So looking forward a little bit to the agenda a bit further down the line. And of course, for those of us who are working on the official side, already very conscious that Ireland will hold the presidency of the EU in 2026. And I know Michael and his team already focusing on some of that. Just a reminder as well, if you want to ask some questions here in the room, obviously get your questions ready. And I have the technology here, hopefully, if people are online and they want to put forward some questions as well. I'll get to that in a little while. But maybe just to kick off, and Michael McGrath, I might start with you, if you don't mind. So we've heard all day, but also in the most recent remarks about the geopolitical situation and this idea of the potential for geoeconomic fragmentation and what that means for the financial sector and regulation. So maybe just your thoughts on that. And we also heard about open strategic autonomy, and you know, we hear lots of debate about that. Is the emphasis more on open or on autonomy? So again, maybe just some of your reflections on that to kick us off. Thanks.
Sure. Thank you, Sharon. And very pleased to be here, and I think it's been a really good day's discussion that we've had throughout today. So I think two kind of sort of issues there really, I think, to sort of kind of think about unpacking just the whole kind of the global backdrop, fragmentation and so forth. So I think just maybe that one before maybe touching on the open strategic autonomy. I mean, I think there's no doubt that the geopolitical context for financial regulation has clearly changed in the last while. I mean, we've moved from an era of benign globalization, and we're now in a much more fractious world. And if you look at the kind of the landscape, and a number of speakers today, so I'm just going to name check them, but the issue, the impact of Brexit, pandemic, and where the financial services actually helped out in terms of supporting the economy there, energy issues relating to Russia's war in Ukraine, the very rapid rise of interest rates and that we've seen, and the impact that has in terms of shifting liquidity issues, the recent banking upheavals in the US and in Switzerland, and also the more recent events in the Middle East. It kind of all points to a huge element of instability in the region. But I mean, the one thing that kind of just strikes me when I just kind of think is sort of kind of EU regulation, and I'm thinking here the theme that we had for this EU regulation, so much the better. I think it's fair to say, and I don't want to sound complacent, but it is fair to say, I think that, you know, it's been quite a number of different stresses, one coming on top of the other. But the system generally has held, I think, in terms of that. And I think that just does point to some of our frameworks in terms of over the last decade and a half that we've built out. Now, so not sounding complacent, I think what we've to definitely look at here is, you know, what are the learnings and where we can do better. And I think, you know, I mean, heard, you know, enhancing resilience, and that's certainly a key that we definitely want to look at. So I think definitely in quite choppy waters, and you know, if I was to start looking at the speed at which things are coming, they're coming quicker and quicker. But we have good frameworks, and then that kind of points to where we need to make them more robust, more resilient, and to build on it. But it certainly shows the benefit of the work that's been done. In terms of very quickly then, maybe just to say a word or two about open strategic autonomy. I mean, for us and for Ireland, we would always kind of put the emphasis on open. And I mean, you know, like I heard, I think Sean Berrigan this morning talking about it. It's an issue talking about de-risking, not decoupling. And I think that's really important. And I think if I picked Paulina up right in her comments, she said we need to do our homework. But I think that's really important that we look towards openness. And I mean, you know, we shouldn't be naive. We've got to make sure that Europe remains open. But there are areas that I expect that we will sort of need to dislocate and have sort of, you know, maybe a certain element of onshoring of supply chains, technology and so forth. But I think that can be done. We need to do it in a way that preserves our competitiveness and make sure that we sort of, that we remain resilient to the sources. And I think resilience is key, and you do that through openness. So they'd be just my immediate thoughts, Sharon.
Very good, thanks. Now, you did address it a little bit, Paulina, in your remarks already in terms of that question around the geopolitical situation, also open strategic autonomy. But just to see if you want to add anything else before we move on.
No, I think Michael actually put it very well. I think for me, I said earlier, I think there is no contradiction. I mean, it's clear that there was maybe a time where people in general say that, you know, globalization is the reply to all the problems in the world. And I think we have come to realize with the geopolitical situation, the shifts we've seen, and I mean the energy situation, the supply chains during COVID, but also the many kind of spillover effects of that, that we probably need to look at this slightly differently. But again, I think for the financial markets, for the financial sectors, we need to be open because these are activities that are global, that need to be global. So I guess it's finding that balance, and clearly open strategic autonomy, the three words are important, including the word open.
Yeah, very good. Okay, thanks. And maybe moving to a slightly different aspect, starting with Michael Darcy, and then I'll come to Tanguy as well. But on this issue of, we've heard a little bit from Governor Bailey, for example, this morning about international cooperation, the FSB. Paulina also mentioned it, it's come up a few times. But notwithstanding having these organisations that are about cooperation at the global level, we have still seen some divergences, you know, in the approaches between the EU, the UK and the US. So you're both working in global sectors, as you say, Paulina, you know, that are open and operating all around the world. So what kind of challenges does that particularly present in a global sector, and what would you like to see, I suppose, maybe changing there or developing there over the period ahead?
Yeah, but I think if you did a word count from Denise's introduction of the Governor this morning, the word that would have been spoken most from this stage is uncertainty. And the level of uncertainty now is higher perhaps than it has been for years. Michael touched upon the reasons for that uncertainty, but we're going to have another period of uncertainty for the next 12 to 15 months. There are 8 scheduled elections in the European Union within 12 months. There will be a new parliament elected. There'll be a new commission. There'll be new commissioners taking up briefs that they won't have. Some may have experience and knowledge, others may not. So that period of uncertainty is likely to continue. You throw in on top of that a number of unscheduled elections. Spain and Netherlands both have caretaker governments. A UK election, and hopefully this time next year in 12 months, the US presidential election will have ended. But there's no guarantee of any of that. And you compile all of that 15 months of uncertainty that's going to flow. There's got to be stability and resilience from regulators, policymakers, and politicians. But in all likelihood, there are going to be parties in government who've never been in government before. It happens every year, let alone with a potential for perhaps up to 10 elections in the European 27. So we've all heard the expression about the centre holding, and the importance is for the centre to hold. And when you have the market stable, calm, you don't have the chaos and carnage that flows when people are worried about their savings and their pensions. And the sector, the globalised sector that you spoke about, Sharon, that I work in and so many other people here, and thank you all for staying for the last session of the evening. That sector has got to be stable. And everything that we do in terms of representative bodies, We are here to support policymakers and the regulators. And Patricia Callan from FSI was on the previous panel. Pat Lardner is here from Irish Funds. Brian Hayes was here from FIBI. And all of our roles is to make sure where we are is stable, safe for savers and pension holders. And the work that we do makes policymakers' lives easier and indeed regulators' life easier also.
Very good, yeah, thanks. Tanga, on that issue of divergence, or?
Yes, no, allow me first maybe to thank you for your invitation and say a few words about EFAMA, because I suspect that many of you have never heard of EFAMA, but the members of Irish Funds. Irish Fund is clearly an important member of ours, and many of our corporate members are operating out of Dublin or have some operations in Ireland. So I think that indeed, as was mentioned a couple of times today, globalization is being challenged, and we do see an increasing regulatory fragmentation, which, as I see it, comes mainly from governments being under pressure to face crises, what be it the climate crisis, geopolitical crisis, or the pressure to boost competitiveness or reduce over-dependencies, and that's the open atomic strategy agenda of the Commission. Regulatory fragmentation also comes from the extraterritorial impact of some recently adopted legislation, whether in the EU or in third country jurisdictions. And obviously it creates challenges, operating challenges for our firms, our industry, in the sense that it adds costs and complexity, especially for those players that operate internationally. It leads naturally to less choice for investors and possibly higher costs or less returns if you have less competition in the market. And okay, it's a fact of life, so there is little we can do but to indeed insist, as Paulina did, on the importance of multilateral cooperation, regulatory cooperation. I think we need to support the work of international standard setters like IOSCO, and I think the industry also has a role to support those fora. Also, transnational initiatives like the International Sustainable Finance Platform. They're doing good work on transition finance. And again, I think the industry, instead of simply just blaming the policymakers for what gets wrong, we need to show support as much as we can. We also need to support, because those globally aligned standards are absolutely key, despite what the governments may be doing. Likewise, we need to support bilateral regulatory cooperation. Again, Paulina, you mentioned the recently established EU-UK regulatory dialogue, I think, or forum. And we would hope that over time, this will allow the UK and the EU to speak consistently, if you wish, in international fora. And my final point would be, precisely because of the cost associated to this increasing international regulatory divergence or fragmentation, we need to do our utmost to make sure that the EU remains an attractive place to do business. So we also need to look at intra-EU fragmentation and identify those remaining obstacles to the single market. The stronger the single market, the more able we will be to export our values. And that's the famous Brussels effect, which we found in GDPR, that we are probably trying to also export when it comes to some of the ESG files. So we need to look at what we can do to make the single market more effective, and this will have an influence on our capacity to influence international standards going forward.
Okay, thanks. And I think on this issue about kind of international cooperation, it's very much for us at the central bank is really a key priority. I think the governor also mentioned it in his remarks earlier, and also the bilateral aspect, and particularly in the context of our large financial sector and our small open economy. Maybe Alessandra, turning to you now. So we have all of this geopolitical uncertainty and wider issues, many of which have been touched on this panel and earlier, but that also comes at a time when the financial system itself is also changing very significantly. So again, we've heard a lot about the growth of non-banks, but also the evolution of the fintech sector, also challenges around climate and how the financial sector deals with that, and Tanga just mentioned the financing the transition. So in the context of thinking about EU regulation, do you think has regulation kept up? How have we done there? Has it remained fit for purpose? Or how do we, I suppose, aspire to make sure that it remains fit for purpose in this changing world?
Well, thank you so much, first of all, for having me here. I'm a little bit Irish, so it's always good to come back. So, well, the fil rouge that we really had today, has been this microeconomics, real changes, the way in which the world has been going through a number of shocks, and how also technology is moving in and really reshaping the way in which, we companies sell, produce, financial services, the way in which consumers relate to organizations, and the way in which they ask for innovation. So the point here is really we're finding ourselves at a time where we already been here at a time of telecommunication changes, when we went from analogic to digital. And, at the time, the blanket was so short, we kept, sort of like, pushing it from, and pulling it from all sides. But we had to make a quantum leap and understand that regulation had to be changed, and that we needed to understand better how the industry, the European industry, was moving towards, a new set of products and a new way to communicate, going on to mobile. So right now we are really at the wake of a big change in bringing on platforms a number of services, and while we're talking about fragmentation, in reality we need more and more sort of getting together and understand how rules can be implemented in a way in which, technology is teaching us the frontiers are not that relevant anymore. So that is such a huge challenge for supervisors, for regulators and supervisors. We had Dora and McGrath, coming in. Now it's going to take a long time before we as supervisor can understand how we can organize ourselves in order to provide that kind of supervision. McGrath is coming in, but it's already not covering part of the technological innovations that are already there. So it's really looking at which angle we should take into consideration. Should we look at the legal entity? So we should look at, the operators, or should we follow the risks? Whether we should learn how to measure new risks in a different way. And I leave it to here now, but I will come back for more.
Yeah, absolutely. And of course, Alessandra mentioned many aspects of innovation there. And you heard in the earlier panel that central banks and regulators love a good consultation paper. So if you weren't here earlier, just a reminder, a little plug for the consultation paper that the central bank launched today on our approach to innovation. And I don't know the number before someone asks, so I'm really sorry. But I don't know which number it is, but I'm sure one of the team can help me out with that. And we'll come back to innovation again in a minute. And a big thanks to Banca d'Italia. Actually, when you got a chance to read the consultation paper, a lot of the work that we did that was around peer review, and Alessandra and her team were really helpful in that, so we're grateful for that. Now, the other big topic, as I said, that we heard a lot about today was non-banks. So maybe Michael McGrath, back to you on this one, at least initially. We've heard all of these issues about the very significant growth in the non-bank sector, but I suppose in big picture terms, what effect do you think that's having on the financial system overall?
Yeah, I mean, I think the NBFI, and I'm immediately breaking my own rules of using an acronym.
Acronyms, yes. But
I mean, so if you look at it, I'm kind of conscious of Irish funds in the audience, so they'll correct me on my figures here. We're the second largest domicile in Europe, third largest in the world, something of the order of about 3.8 trillion of Irish domicile funds here as of this July. But I think what I picked up, I mean, it has hugely grown. And a lot of our focus for quite some time has been on the banks and looking at that and seeing where it is. And trying to move activities or assets, etc., out of banking. So I think it's only right and proper. And I think, so I'm not sure if I'm misquoting the governor today, but I thought I heard him saying that the non-banks sector deserves our full attention. So I think that's right, and we have to look at it. So first of all, if you look at it where we've got to at the EU level, we've just done the AIFMD review, and that certainly will play a role in contributing to financial stability. We've looked at the liquidity management tools that are there, looking at the various EU frameworks in loan origination and so forth. So I think we're certainly making good starts on it in terms of that. I mean, I think we do need to sort of then just, what I would say, join the dots, that if we're talking, I don't recall the figure that I heard this morning around the amount of money that I think Sean said that we need on a over the next number of years to finance all of the transition. I mean, that's not going to come solely from the banking sector. And it probably won't even solely come from within Europe, which is another reason why we need to remain open. But I think that whole, so it does mean that the NBFIs have a significant role to play. I think perhaps maybe the sector hasn't done sufficiently well in explaining, and that might be a little bit of financial literacy piece there, in explaining to everyone the role that they can play and the role that they do play in terms of in relation to pension funds, investment funds and so forth. I think that's really important to do. But also at the same time, I think we have to make sure that we don't have a situation where we've created lots of resilience and lots of kind of rules and frameworks in one area and forgot others. So I think it's important, but it's to be balanced in that. And then if I maybe just finish, Sharon, just just at this point on a point that within and those that are domestically focused here will be aware of it, that we started earlier this year a review of the fund sector. And so just thinking about this panel, I just looked again at the title that we gave it in the department, which is Fund Sector 2030, a framework for open, resilient and developing markets piece. And I think that's a huge piece of work. So we want to remain open, we want them to be resilient, and also to develop the markets and to be meaningful there in terms of from economics, economic well-being and so forth. So I think that's going to be a huge area that we need to look at. That will probably mean that some of our frameworks need to improve maybe. We may need to do some more in it. But I think it's to do it in a way to understand how they enhance, that they play a role, rather than my concern will be as if you're doing it as in, oh, we need to make this smaller or whatever. I think make it more resilient, yes, but make it more relevant and contributing to economic activity as well.
Yeah, and I know we've worked with you a little bit on the review, and much of the work at the bank and the department is obviously connected. And I think our view is very much similar, that, you know, the non-banks play a very important role in diversification in the financial system, particularly in terms of funding, for example, as you say. But of course now it's a very globally interconnected sector, and in the Irish case, you know, many of the non-banks that are here are globally interconnected rather than with the domestic economy. So I think part of our thinking is also about that, I suppose, global public good that Governor Bailey was talking about this morning in terms of global financial stability. So we also look at the issues in that context. Anyway, Tanga, have you anything to add on this point about, you know, I would say the overall effect that the growth of the non-bank sector is having on the financial system?
Well, maybe let me start by saying that it's good news that we have seen such a growth. You know, this is the whole point of developing market-based finance, which is needed to finance innovation, which will make us competitive, finance the transitions, finance, as I mentioned earlier, our objectives in terms of open strategic autonomy. If we start onshoring, reshoring, friendshoring, this costs money, so someone needs to finance this. If I look at what we have been doing with EFAMA, and Irish Funds was very active on that front as well, you know, we are a bit taken aback by this, what we perceive as being the sole focus on open-ended funds, whereas the NBFI sector covers far more than open-ended funds. It's a very diverse sector. Now, I understand that why some would like to focus on open-ended funds, but the way we look at it is, you know, we believe that the FSB members, for one, really need to take a far more holistic view of the NBFI sector. We consider that if you look at open-ended funds, the growth we have seen over the years is mainly due to either inflows or capital gains, and not so much to leverage, because there is very little leverage on average in open-ended funds. If we look again at the regulatory framework for open-ended funds in the EU, it is very robust, credit to the policymakers, and we welcome the recent review, targeted review of AIFMD and UCITS, and this, you know, availability of LMTs and those kind of things. And if we look at recent crises, you know, including March 2020, we haven't seen any major issues. I think that the system, the framework that we have and that we are subject to, has proved it is resilient. And we believe overall that the supervisors, or some supervisors, first, they underestimate how heterogeneous the fund's client base or investors is. You know, we have very diverse types of investors, and so they, you know, one and two, they are not all sensitive to market fluctuation. So this fear that there would be a run on open-ended funds, as you might have a run on the bank, we haven't seen this in recent history. Likewise, we say for all those reasons that our sector, the open-ended fund sector, is not systemic, but it doesn't mean that a certain subgroup does not deserve additional attention. And I think for some of those funds, those especially which are highly leveraged, we certainly need effective macro and micro supervision to identify and supervise those subgroups. But I think my main message is really, you know, when we talk about NBFI, it is not a sector. You know, it is defined negatively, and we need to be far more precise and avoid being lazy, just, you know, equating NBFI with open-ended funds. And again, we have a very robust framework. Looking at the recent work of IOSCO and the FSB, we are concerned about what we perceive as a too mechanistic approach in the choice of liquidity management tools or anti-dilution tools, and we would hope that what will be finally approved as a framework will provide enough flexibility for the management companies to choose different liquidity management approaches if they have good reasons to do so. And my final point would be, you know, we also need to look at liquidity supply. I think the post-GFT reforms have really had an impact on liquidity, you know, on broker-dealers' activity in terms of market making. And I think now it's maybe a good time to look at ways we can improve the supply of liquidity overall.
No, thanks for that. Now, I don't say too much about the FSB process because obviously, well, people are aware I'm involved in chairing that group, and we've had the consultation process, which is closed now, so I'm just conscious of that, and we haven't published the outcome yet. So obviously, we've heard a lot of feedback from industry and other stakeholders, academics and so on. We had an event even here in Dublin. So, you know, you'll be hearing more about that in the next few weeks or months. The only nuance maybe I would add to what you said, certainly I think from our perspective in central banks and regulators, is that during those periods of stress in March 2020, for example, or during the LDI events, which Governor Bailey referred to earlier, there was, of course, a different policy context in terms of very significant monetary policy support, for example, and then, of course, during the pandemic, fiscal support as well. So I think you have to see the periods of stress also in terms of the sort of wider context. But anyway, on the FSB, as I said, we'll be hearing more about that in the next little while. I'm going to turn to innovation in a second, but just before I do, anything else on non-banks? Michael, did you want to add anything, or
yeah,
Alessandra?
Just very quickly, the figure that I had, Michael, was 4.4 trillion. Domiciled in Ireland, and I just recently got figures from the CBI, but I picked the date, and the date I picked was January 13. And the reason I picked January 13 was because that was the start of Brexit. I was at an event in London that former Prime Minister David Cameron announced that if the Conservative Party won the 15 election, they would hold a referendum. But the figures for the domiciled funds in Ireland in January 13 was 1.3 trillion. So that's the level of growth of domiciled funds here. And I don't have a figure for the non-domiciled funds where that have the legal authority here, but are domiciled elsewhere. But the growth is enormous. But equally with that enormous growth is a high level of supervision. And what people outside of this room and in general wouldn't know about that high level of supervision, that oversight, not just with the company itself, with the organisation, but with the man goes over each fund then as well. And it's well organised, well structured, and it's crucial because in the future, the requirement will be for those private funds, for multilateral lending, as well as governmental lending, to deal with the climate change issue that is very fast coming down the tracks at us. And now and in the very near future.
Yeah, thanks. Alessandra, you want to add something?
Yeah. I just wanted to... Can you hear me?
Yep.
I just wanted to mention the fact that, non-bank financial intermediation is probably the most innovative one that we have. But it's very hard for us as supervisors, so bringing in, the point of view of supervisors to look at them because they fall outside the prudential supervision. So it's a little bit of a blind spot for us. It's very hard to understand because they're very different. They present risk models, they're extremely different. So it's really hard for us to understand how to relate and how to come in the relationship with them. In Italy, we have about 500 different, between banks and non-banks, intermediaries. And what we have been doing has been to map them, and also see what kind of a lifespan they have in our country, and, how we can relate with them, trying to bring in, today we were mentioning, I think I was just talking to Governor McGrath about it, a trust relationship, with them. And I think that's very, very important. Because I think that their role within the system, it's increasing, and the kind of shocks that they can bring to the system is real. It can move into also the banking system. So I think that we need to be there. And the crucial part is, how do you regulate without stifling, innovation? That is the crucial issue for a regulator.
Yeah, and I think that focus on connection, either between individual funds or between funds or other fintechs or whatever, with the wider system, I think is one of the big challenges.
Exactly.
Now, I'll take one more question here with the panel before I go to the audience, but actually, because you mentioned innovation at the end there, maybe Paulina, and I know you have a big non-bank agenda at the Commission, but to turn to something else, maybe if you didn't mind. I mean, one of the big issues that features in our consultation paper today, and I think also in our minds here in terms of policy and regulation and supervision around innovation, is harnessing the benefits while mitigating the risks. So in terms of maybe some of the innovation aspects, how do you think we get that balance right, particularly as policymakers, and what learnings do you think there are there for us to think about?
Well, I think first of all, balance is really the right word here. I mean, how do we find that sweet spot, I guess, between, on the one hand, making sure that we foster innovation, which, by the way, is happening whether we want to probably encourage it or not, and then at the same time, obviously, financial stability concerns, investor protection, consumer protection, and trying to kind of find that balance in the regulatory framework. And as I said, in a way, accompany a development which is happening anyway. I was recently speaking to someone who knows a lot more than I do about AI, and that's not difficult because I know very little. But this was someone who objectively was very knowledgeable, and what this person was saying was that, in a way, it's not surprising what AI can do, but what is surprising is the speed with which the kind of capacity is expanding, the sheer capacity of these tools. So I think that all that to say that in any case, these things are happening, and we just need to make sure that we try to accommodate it with the legal framework. I was, to Alessandra's point about DORA and MiCA, I think what we saw in Europe, and we probably were a little bit maybe earlier than many other jurisdictions in terms of trying to regulate some of these phenomena. I think that the reason for that was twofold. One being that when it comes to MiCA, for example, the marks in crypto assets, our sense was that crypto assets are here, they're not going to go away. So we might as well try to get a proper regulatory framework around it. And the other reason being that, as always, being a single market of 27, if you wait too long, there will be member states that say, this looks like a scary area, we need to start doing something. And then it's obviously better to have a European approach. I think that what Alessandra was saying in terms of how does legislation keep up with this innovation is a really valid one, and I don't have a good reply to that question. I think the option to say let's sit back and wait, let's not regulate, we just don't have the luxury of doing that for the financial stability reasons, consumer protection, investor protection reasons. At the same time, I think we also need to recognize that it is our procedures and processes are maybe sometimes a little bit slow compared to the kind of speed of the digital transformation and innovation. So it's probably something that we need to reflect on. I think part of the reply is our so-called level 2, so that we have our supervisory authorities, that they can kind of work with implementing and delegating standards and technical guidelines. But also that, of course, is a little bit of a process. So clearly something that we probably need to need to reflect on. But on the side of the supervisors, I think that indeed, I think it's a process for everyone. I think it's interesting now with these new frameworks coming into application, but I can see that that will probably have a lot of challenges for supervisors as well at national level, but of course also at the level of our European supervisory authorities, where we have quite a lot of work ongoing. Also, for example, the ESAs are looking into big tech. What do we do when big tech is increasingly entering the financial services sector? So I think I've said a lot already, but I think it's really about finding that balance, I think, between the innovation and the making sure that we regulate properly.
Yeah. Alessandra, I know this has been a big focus of your own work in terms of innovation in Banca d'Italia and the hub that you have in Milan. So maybe what's your own views on sort of getting this balance right?
Well, just as I was saying, the real thing is how do you regulate, this new fintech, they're coming in, they play a huge role also in relation to their behavior with, banks, and they are the most innovative in the market. What we are trying to do in Italy, we have a center for innovation which is based in Milan, because that's the financial, sort of the financial market active in our country, is to really try and work together on specific projects for use cases. Let's say, applying technology to a number of different sectors. We worked on AI, we worked on DLT, and we're launching a third call very soon, trying to understand what are the real issues that would allow them to come in the market in a stable, sustainable way. And those have been extremely important, because I think we're getting a lot of feedback from this project. It's not only it's not a sandbox, because we work together at developing the project up until the prototype, all right? So we stop, of course, one step behind, of course. Being also the vigilant, authority, so we can go further. But it's been very interesting, because we provide them advice on how innovative their project is. We provide networking. Some of these projects are coming with us now, Singapore next week, and in that way, I think we're getting a lot of feedback in terms of what are the rules that would allow them to be growing and to be sustainable. The thing is, how do you make sure that this innovation is actually sustainable in the European system? Yep. I mean, safe, inclusive, sustainable. And I think that we have a lot to learn from the industry from that viewpoint.
Very good. Tanga, I think you wanted to come in, did you, before go to the audience?
What Paulina was saying about whether to regulate or not, just flagging the risk that if the EU does not regulate, we always run the risk of having some member states developing their own regulations, and this creates fragmentation. It's not only in the fintech space. If I look at it in the ESG space, we have no EU labels, but we have a flurry of ESG labels. I think it was even making the headlines yesterday in Les Echos in France. They will reform some of their labels there. It just creates fragmentation. It's not good for the single market. It's not good for the cross-border distribution of funds. We have seen it also with SFDR. The lack of clarity with Article 8 led to some national doctrines being developed. So not regulating means running the risk of having some member states developing their own set of rules.
Yeah. Now we'll go with innovation here on the panel, and we'll have the innovation of the question on the iPad, also because the battery in the iPad is about to go, so I'll lose the question. But maybe, Paulina, it's probably a good question for you, because the question is that the financial sector has changed rapidly, as we've been discussing, including AI, which you mentioned yourself, and the opportunities and risks from AI in financial services, and does it need its own legislation? So maybe you want to say a word about the AI Act, or thinking more bespoke in financial services.
Yeah, indeed. Yeah. No, I think the AI Act, of course, which is not... Well, it's broad ranging. It will cover all sectors, so that is a piece of legislation which is currently making its way through the Council and the European Parliament, and I guess hopefully with the idea that this will be agreed before the parliamentary elections next year. I think it's probably too early to say whether you would need something specific on financial services. Again, I mean, financial services are covered by this General Act, but I think it's really too early to say whether we would need something very specific on financial services. Probably something that we would need to and want to reflect on the months to come.
Yeah, very good. Okay, thanks. And now to the audience, questions? Yeah, we have one here anyway, yeah, and one over there. So we'll take the two. I think it's Peter Oakes there, is it? I can see just about, yeah. And I can't see here. I can see the bright light. I'm sorry. Maybe say who you are, yeah.
It's John Lorgan from William Fry.
Yeah.
A question, we've been discussing openness in a global context, and I wanted to ask a question about openness within the EU. Mm-hmm. And I'm thinking back to Monique Goyen's presentation earlier today, where she spoke about the sort of lack of choice for Belgian consumers in the context of banking services. And I suspect that's sort of pretty common across different member states, where it's primarily the sort of the domestic providers who are sort of serving those markets. And it seems to me to be sort of quite sort of undermining of the whole EU ideal of free movement of capital services and so on. I think it's sort of more difficult today to passport around Europe than it would have been a number of years ago. So my question is, should Europe, and I don't know whether that's the Commission, whether it's governments or whether it's the ESAs, be doing more to facilitate passporting by financial services companies around Europe?
Okay, thanks. Peter?
Yeah, sorry, it's more of a question around the funding models for these innovative firms. So as regulators, are you getting nervous in an increasing interest rate environment with the funding models of some of these fintechs, venture capital funded versus funded by a PLC parent company, for example?
Okay, very good. Oh, yeah, Pat, yeah. We'll take one more and then I'll try and divide them out. Passporting, who wants to talk about passporting? Yeah? Okay.
Thanks, and thanks for a very good conference and a very good panel. So I probably have 3 questions, but we've done so I think, sorry.
That's okay.
It's a great panel. So I think to Paulina, the question is, there's been more discussion more recently around nativism and the fact that CMU might start to develop more from the bottom up than the top down. And again, in the context of a single market and what we've discussed, just maybe some views on that. I think the points that Alessandra made around, again, understanding in prudential systems, non-prudential systems. So a lot of the discussion that I observe is really good discussion about banking or about non-bank financial intermediation or about insurance. Where is the discussion which is connecting them? Because I think actually it's quite vertical. It doesn't seem to be as horizontal because we know that money risk is passing between those segments. And I think that the last question, which is a more general one, everyone over the course of the day has acknowledged the fact that the world is moving at a much faster pace. And I think somebody quoted me recently, the average time for a level 1 measure is 2.5 years, I think, in the Commission. I think that's a right statistic. How do we think policy, regulatory and legislative frameworks need to adjust or amend to keep pace with a world that in every other respect is moving much more quickly? Sorry for the multiple questions.
That's okay. Thanks. We'll try and get through those quickly because I'm conscious of time now, and I have a colleague from the Central Bank telling me that we're between the Governor's closing remarks and everybody going home. Anyway, passporting. Michael, let's start with that. Oh, yeah. Both Michaels.
Sorry, do you want to?
You go ahead.
just think a broad conversation. So there's a requirement to speed up the European Union's decision-making process. And I touched upon David Cameron and his point about reform of the European Union, go back to 2013 and beforehand. He wasn't wrong, but he got no hearing. It subsequently led to Brexit and pretty chaotic period for the UK. But the Capital Market Union has been on the agenda for decades. It's still on the agenda. It was at the top of the agenda for this Commission, this Parliament. Has it moved? Yes, a little. Slowly. And the point about the single market is that the citizens of Europe don't have product choice, whether it's savings, mortgage, or any other financial products that they should have, that they do have in the United States and in some other jurisdictions. And it's an error, and as Pat's point was, technology will bypass everybody, and we will then be all playing catch up, and people will complain when something subsequently goes wrong.
Yeah, Michael, and then Paulina wants to come in.
Yeah, no, just maybe just to pick up on a couple of the themes there in terms of openness, passporting, CMU, that sort of, I mean, you know, a lot of this I kind of sort of see in some ways, you know, if you look at it through trust, and I think we haven't done enough as a sector to develop trust with the industry, consumers, regulators, politicians, etc. So I think that's going to have to, that I think to me will be some of the building up some of that trust, will assist with some of the time period that Pat mentioned there in terms of the 2.5 years, because there's no question we'd be foolish to even try to think that we can stop innovation. It has to, we have to move with it. But I think there is a benefit from sort of trying to encourage some of the activities, get a little bit more understanding and knowledge, and that then may well deepen the knowledge of customers in particular areas. And I think work of the retail investment strategy might help there. CMU, it's an ongoing structural thing. It's not something, in my view, that you just get done. It's a long-term structural issue, both from top down and as the president of the Eurogroup at the moment is looking at in terms of bottom-up issues. So I don't see them as either or. Yeah. And then maybe just a final comment I just mentioned, and it's just really just to acknowledge, I think the announcement earlier today in the Irish context in terms of the your document, that I don't remember the number of either on the sandbox. I think that's really a great announcement, and I think that there's great work that can be done there.
Yeah, very good. Paulina, and then I'll just go across the panel in terms of picking up the various points. So I'll give the floor to Tanga and Alessandra in a minute, and then we'll wrap up.
No, just very briefly, and I think a lot has been said already. I think to just throw in another thought on the passporting and or rather the sometimes lack of products. I think to some extent that also goes to the whole conversation about financial education and financial competence, and people basically also being aware what kind of financial products are actually out there. One thing we have tried a couple of times in the European context is EU label products, so-called 28th regimes. And the reason that actually has not worked very well, for example, a couple of years ago, it still exists, but it's not maybe not been taken up so much. It's a private pension product. It would be a kind of EU label private pension product. I think personally one of the main reasons why that did not work out so well as we had hoped as regulators and policymakers is tax treatment. And that brings me to CMU and the CMU question. I think CMU is a bit of the, with Michael, we were laughing that there is no CMU panel, but we get the possibility to speak about CMU anyway, and that's a great thing. It's one of these, is the glass half full or half empty? I would still tend to think that it actually is half full. As been noticed, a lot has happened, a lot has been done, we are making progress. But this is very structural. CMU is not about creating one new authority. It's not that one piece of legislation that will make CMU happen. So I think that there are a couple of bigger issues we need to look at. Tax is clearly one of them, which does prevent cross-border flow of capital. There are issues around pensions, for example. We have member states where you have a rather capital market-based pension system, like Sweden, for example, which means that you have a higher retail participation in capital markets. You have a more integrated capital market ecosystem. Super complicated and a lot of national prerogatives in the area, but I think that's probably the kind of bigger issues that we also need to tackle if we want to make even more progress with CMU. I agree with Michael that it's really a matter of turning all stones top down, bottom up. A lot has been done in terms of EU legislation. There's probably also things that can be done nationally, and by the way, also looking at the kind of practitioners around you. I think there's a lot can be done at the level of individual capital markets operators as well.
Okay, thanks. Tanguy and then Alessandra. Yeah.
No, maybe on CMU to add, fully agree, on the PEP, your PEP assessment, I think it's taxation. It may also be due to the fee cap for the default option. Hopefully EIOPA can find out and do some work in the next couple of months or years. Securitization, I think, will be key, including green securitization. AFME will publish a report, a KPI report on CMU tomorrow noon, and it shows that on the ground it's still very much bank-based, the financing of our economy, and I think that this will remain so for the foreseeable future. Hence, the need to kind of revitalize the securitization market, including green securitization. I would also mention the need to promote long-term investments, not only the PEP, but also the LTIF. We need to make it work, and we need to make sure that the calibration of the level 2 measures will not kill the product. And we have huge concerns, which we have shared with DG FISMA recently. Pension policies, but that's more bottom-up indeed. But we need to increase the size of pension assets. It's a great source of capital. And finally, maybe also stressing the need to ensure in the coming years that UCITS and AFMD remain those international gold standards. We should not be complacent. The Eligible Assets Directive will come under review, and we need to be very careful about how this will be received internationally. And here I would like again to maybe stress the work of Irish funds for one, in the promotion of the UCITS brand and AFM brand internationally. But we had a meeting 2 weeks ago in Cyprus. We met many representatives of other national associations in Asia and Latin America, and they know the UCITS as a wrapper. But again, but we should not take it for granted. We need to be very careful and ensure that it remains the success story that it has been so far.
Okay, very good. Thank you. Alessandra, last word.
Just on the issue of the financial model for what we have seen basically with the Silicon Valley Bank. One thing I just wanted to say is that we do not have in Europe such specialized banks that only have as a client base, fintech companies. And of course, the interest rate raise has been really an issue for them. But we do have, venture capital and private equity that are extremely involved in the sector. So I think that is one of the issues that we have on the table as regulators, and there is no clear answer to that. And by the way, if we look at the United States, there have been a number of other banks that have gone bankrupt, recently, and we haven't heard that much about it. Most of them had been extremely specialized in the sector of tech. So that's something that we need to look at. I think there is a post-mortem exercise that we're all trying to do in trying to understand how to tackle these issues. On the issues of the bank-on-bank insurance, I think that, as I was saying before, more than looking at the legal entity, we need to look at the risk. All right? And this is an engagement that we're taking the Financial Stability Board now. We're starting to discuss these issues, so I think it's not completely, abandoned to itself. It's becoming clearly one of the things, because again, platforms are bringing these issues, to us in a completely different way, where fragmentation is a real issue.
Yeah, just very briefly for myself before we wrap up. I know you were asking about passporting, but I suppose Alessandra and I are both on the supervisory board at the ECB, and of course a very big priority there collectively for all of us is banking union and what that should also deliver in terms of a more integrated banking market, accepting it's a bit like some other files that, ebbs and flows in terms of taking time, but I think is something that we all, certainly at the central banks, remain very committed to. And just on Peter's point, maybe just to complement what Alessandra said about the fintechs, I mean, certainly in the interest rate environment that we're in now, the pricing of investment and so on, it's a very different context, I think, to where we were a number of years ago. We certainly see, in terms of some of the firms that we're engaging with, more concern about investors and an investor base. And I can see how that's a concern for firms who want to get into business and they want to be able to innovate, and that's very important for vibrancy in the economy and in the financial system. But of course, from a supervisory and regulatory point of view, we also want firms that are sustainable through the cycles. So as rates are going up and down, which is the more natural cycle, even though we had low for long. So we do want to see that sort of business model sustainability. So I'm very conscious of time now, particularly as we're coming to the close. So just to say thank you so much to all our panellists, particularly those of you especially who've travelled to be with us today. We really appreciate all of you participating. So Gurmila Mahagut, and with that I'll hand over to Denise to close us out. Thanks.
Thank you to our final panellists. I think we've ended on a very good note. We've now reached the end of our day. While you were here, you should have received an email. We really want to get your feedback on how you found today. The feedback we received last year directly fed into our thinking on the design and implementation of today's event. So please do give us your feedback. I'm now going to hand over to Governor Gabriel Makhlouf, the Governor of the Central Bank of Ireland, who's going to close our event and give some final remarks. Thank you.
Thank you, Denise. I'm going to start with some thanks and then just make some closing remarks. As usual, when I'm doing closing remarks, I have a bunch of scribbled notes that I've been making. And as I haven't worn my glasses, the remarks may be very interesting, and I need a few minutes to sort of make sure I get them right. But look, let's kick off by just thanking what I think have been a fantastic set of speakers and panelists throughout the day. I also want to thank Denise for keeping the show together, or at least connecting it all up. But I want to, in particular, thank Sonia Felton and the stakeholder engagement team and everybody who has actually helped to make sure this event happens, including colleagues here at the Aviva Stadium, Lansdowne Road for some of us. Now, throughout the, I mean, it's pretty hard to capture, you know, what's happened today if you think about the sort of broad range of issues that we've been discussing, from sort of global economic fragmentation right through to the way we make regulations in Europe, and lots of things in between. There's a bunch of words that kept coming up, which I've been writing down here. One of them, which I'll come back to, is uncertainty, accountability, responsibility, sustainability, customers' best interests, competitiveness, productivity, well-known phrases such as capital markets union, banking union, of course. I think one of the threads of all of these, really, and I want to just take us back to the word uncertainty, which for me, and it's not just because it's the somewhere the title of the over there, achieving good outcomes in an uncertain world. It's not just because you know, the theme of the conference has been uncertainty, but actually the theme of virtually every panel and every presentation has been uncertainty. And you know, I've been reflecting quite a lot before the conference about this sort of uncertain world we live in. And it is sort of worth reflecting a little bit about what we've learned from history. So the high point of globalization was basically the beginning of the First World War. And after the First World War, the global economy started to fragment. And we know what the conclusion of that process of fragmentation was. So one of the lessons I have taken from just sort of trying to understand history is let's make sure we work against those processes of fragmentation, because the consequences could be very bad indeed. But as Christine Lagarde is, you know, quotes regularly, she quotes Kierkegaard regularly, and his quote about understanding, I'm paraphrasing, understanding life backwards, but having to live it forwards. And in an uncertain world, from my perspective, one of the most important things that we can do in understanding the world ahead of us is to make sure we keep an open mind, to make sure we talk to each other, to make sure in particular that we listen to each other so that ultimately we understand each other. There are almost certainly no definitive answers to most of the challenges we face. In the end, we have to make judgments. So if I can bring you to sort of a very practical item that we've been discussing today, which is the individual accountability framework. So one of the themes of our, the way we want to work in the central bank is to be very open and to be very engaged. And the IAF has been an example of that process. In the end, we've listened to what people have said, but ultimately we've had to make judgments. And we're prepared to explain and defend our judgments. I'm quoting the IAF because I want to just give the sense that in managing these uncertain challenges around us, as somebody said today, perfection is not the required standard. And it's almost impossible for us to try and aspire to achieving that standard and to get to the certainty that we would all like. And as I said in my remarks this morning, we cannot wait for certainty before we act. But I think one of the best things we can do is continue this sort of dialogue, where we, as I said, talk to each other, listen to each other, hopefully understand each other, and appreciate why judgments are made, and ultimately, I hope we trust each other. Thank you very much.